Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Hey, Freddy, how are you?
Hey, Philip, and hi to everyone else as well. Once again, happy 2021.
Exactly. Happy 2021. It's starting to be as eventful as we left 2020. But before we get to it, Freddy, I just want to mention to everyone that we also have a new podcast episode out of our In Your Best Interest podcast. And on that episode, we have a great guest. His name is Mr. David Gerald. He's a CEO and founder of the Securities Investors Association of Singapore. And David and I, we talk quite a bit about investing scams, how you can spot them, how you can avoid being caught in them, and resources that are available to do the proper due diligence for you. So you can listen to this episode by going to stashaway.com/podcast or searching for your in your best interest in both Spotify as well as Apple Podcasts or Google Podcasts or wherever else you listen to your podcast too. Freddie, obviously, like I said, eventful week already, right? We had the second impeachment of Donald Trump. I'm not sure if that's a record or if he's the first one to ever do it, but what are your thoughts on this and how is this, shaping up?
It's probably a Guinness World Record, and I hope it's the last time we will talk about Trump again. So it's outgoing, and we should move forward. But yes, there are complications and dynamics that comes with what Trump was impeached for. In particular, the incitement on the riots that stormed the Capitol Hills. That's all now put a lot of Republican senators in a bad light, especially those who's supported Trump in decrying the election results, not acknowledging Biden's win. So already a lot of companies and institutions that used to give funds donations to these senators, they were pooling funds. So it comes with a price already for a lot of people. And I will take it one step further. We already know that the Democrats they now split the Senate with the Republicans 50-50, and they have the swing vote in favor of themselves because of the vice president is Kamala Harris. Now, actually, more than that, since Republican senators are looking bad, there's also a pressure now, right, to do something popular. And the last time they were the reason why the fiscal stimulus package were so small. So the chances now, in the grand scheme of things, the chances for now fresh stimulus under the Biden administration is a higher probability than before.
Yeah, no, I totally agree on that. And Freddie, I think that goes hand in hand with one of the questions we actually got right from one of our listeners that we picked up from Gary T, and he said, "Hey, thank you for the videos, but what's the view of the market right now? Is this really the rally actually sustainable? Right? What are the indicators telling you, Freddie?"
Well, so other than the reason being the more stimulus coming in to disconnect the market again from the real economy, um, on the real economy itself, leading economic indices have improved quite dramatically. In particular, our favorite indicator, the Conference Board Leading Economic Index, has gone from minus 13.5 percentage point year on year back in March, being in March, April, the May, June quarter, has now rebounded all the way to minus 2.2 percentage point year on year only. So the contraction in the economy is a lot less severe than before. And this number is not distorted by the stock markets or stimulus. So this is a true indication. And we do have vaccine progresses. So overall, there are reasons to believe that 2021 would not be it would not be as bad as March 2020. Having said that, I do want to caution that I think Gary T's also probably draw inspiration on this is that valuation is not cheap, right? So that just means that this is probably a year of a more normalized return in stock indices rather than a 20% or some crazy 30, 40, 50% numbers for let's say for tech, you're looking at something more subdued, something more normal and more average of the past years. And that's pretty good news. It's not a bad news at all, right? It just tells us to focus more on diversification and to source return from more places than just a single source.
Exactly. It comes back to the diversification we always preach, right? And I think that goes hand in hand with another question that our customer experience team received from one of the clients, right? And the client wrote in to see, what are your thoughts, Freddy, on the potential change in the control of the Senate, which you kind of already mentioned here earlier. But given the expected challenge to big tech, right? What is the outlook for US equities in 2021? So we kind of touched on this, but I think I'm getting the same questions a lot, right? What do you think about big tech? Are they going to get broken up, right? Are they too powerful? And I think this last week really highlighted this again as well, right? If someone can be just shut out of their platform to speak, what impact do these things have, and is this going to have an impact on these big tech companies?
Well, for sure, the greater presence of the Democrats across all chambers of the U.S. Congress now will ramp up pressure in terms of antitrust measures against big tech firm. But they will put up a good fight. They will, muck it up into a lot of legal processes and counter lawsuits and protests. Right? It will be years before anything would happen, but the pressure itself would be enough for markets to start focusing not just on tech, but to start looking at other beaten down sectors during the pandemic. And tech being the pandemic winners, the vaccine itself already has a chance of creating a so-called sector rotation out of tech into something else. And now with antitrust props, it's just going to make it more possible. And so I think for 2021, the biggest theme for investors to prepare for is sector rotation. And as StashAway, when we have been preparing for this for some time now, and diversification is also another way to minimize the impact of being too concentrated in tech names, right? So I would say yes, we need to prepare for it.
No, absolutely. So thank you, Freddy, for this. I think we had another question, but it was kind of going into the same direction, right? Of indices overheating, which I think we already covered with the two questions before. So again, thank you for everyone to send us a question. Always feel free to do that. Either if you listen to this on YouTube or Facebook, put them in the comment section. We'll pick this up. Otherwise, always feel free to send us an email to support@stashaway.com. Freddy, otherwise, if you're interested, everyone, to learn more and see more about the market outlook, what Freddy thinks, but we also have a guest join Freddy next week, and it's actually BlackRock. So we have a webinar coming up. It's a regional one, so you can join from anywhere. It's BlackRock X StashAway Market Outlook 2021. It's on the 19th on Tuesday. Singapore, Malaysia, it's 7 p.m. for you. For the MENA region, it's going to be 3 p.m. Gulf Standard Time. So please feel free to join. Links are in the show notes below. You can also find this by Googling and going to Eventbrite or to our website or Facebook page as well. Again, thank you all very much for listening. And Freddy and myself will surely be back next week. Until then, have a great week. Bye-bye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.